Africa gets 826 billion naira facility to support recovery from pandemic, Russia-Ukraine conflict. We have enough supply of premium motor spirit to last the next 47 days, says NNPC Limited. Federal government, through the Debt Management Office, to action 225 billion naira in 3 tranches. This is Business Express on the network service of the NTA, and we are reaching you from Abuja, the nation's capital. I am Benny Adams, your guide. Good to have you. Stay tuned on business. And we'll start by telling you that the Africa Finance Corporation has launched a $2 billion, which is about 826 billion naira facility to support recovery and resilience in Africa as a response to economic challenges created by the COVID-19 global pandemic and the Russia-Ukraine conflict. The announcement was made on Thursday in Abuja at the AFC Live Infrastructure Solutions Summit. The corporation said the facility will be disbursed through loans to selected commercial banks, regional development banks, and central banks in various African countries, providing them with much-needed hard currency liquidity to finance trade and other economic activities in their jurisdictions. Before now, the AFC had committed to funding up to 50% of the new African Economic Resilience Facility and mobilizing the remainder through the corporation's network of international partners and investors. And the Executive Secretary, National Sugar Development Council, Zach Adediji, has said that Nigeria needs cane plantation on 250,000 hectares of land to attain self-sufficiency in sugar production. Adediji, while playing a host to the management of Abubakar Tafawa Balewa Teaching Hospital, said the importation of raw sugar into the country is the aspect drawing back the sector.
We regulate sugar operator will also make environment conducive for those that want to grow the cane so that we can meet our requirement. And as a matter of statistics, today we consume roughly 1.7 million metric tons of sugar in Nigeria.
He, however, said with the 150,000 hectares of acquired land to be irrigated and grow cane, the sector would meet 50% of what is required in the country. The federal government says despite the fuel queues in the federal capital, Abuja, this week, the Nigerian National Petroleum Company Limited, NNPC, has premium motor spirit, that is petrol, that can last more than 47 days. This was disclosed in a statement issued by the Nigerian Midstream and Downstream Petroleum Regulatory Authority on Thursday. According to the agency, the nation has 2.65 billion liters of fuel, and that will last for 47 days. Now, oil peers gains as investors weigh Russian ban, China outlook. Let's take a look at the price of oil and other commodities on the global market. The National Bureau of Statistics (NBS) data indicates that microfinance banks in Nigeria recorded an 82% boost in lending, rising from 300.2 billion in 2019 to 546.6 billion naira in 2020. As of 2018, total microfinance loans to the private sector was just 2050 billion naira. This has now doubled in 2 years due to factors that include improved technology, easier processing of loans, better loan recovery methods, increased competition, and a growing class of employees with an appetite for short-term credit. What does this mean for financial inclusion and development of this sector? Earlier, the Chief Operating Officer of Nigerian Microfinance Platform, as the NMP, Adetunji Afolabi, joined me for this conversation. Let's have it. Can you kindly take us through the microfinance sector in Nigeria and its impact so far?
Well, thank you, Benny. The microfinance concept itself is what has been with us over the years. In the 70s, we have the cooperative societies, which metamorphosed to what we then call the community banks. But the concept of the microfinancing, the coining of that word actually came from a professor in Bangladesh in 1970, Professor Yunus, which was referred to as the sister of microfinance. And the concept was predicated on the fact that this can help reduce poverty, and so many developing countries has lapped on that. And Nigerian government took a cue from that, and that came about when the community banks were transformed to microfinance bank, and the subsequent release of the regulatory guideline in 2015, when the microfinance banking scheme was inaugurated. It was supposed to also provide, access to finance for the economically active poor that are excluded from the mainstream financial system, if you may put it that way. Provide employment, gender equality, and to accelerate rural development. So the microfinance evolution in Nigeria has gone through stages. Ideally, I like to refer to those stages from the word of Dr. Godwin Higgins, the former MD of LAPO, referring to the stages as the feasibility stage of the microfinance evolution in Nigeria. This at the time when we needed to convene the stakeholders that it is noteworthy to put money in the hands of the active, economically poor people of the society, whether they will be able to do business with it. Then from that stage, the microfinance evolved to what we call the sustainability phase of the microfinance, which was then concerned about how these institutions that are doing lending can be sustained over a period of time. And that was well demonstrated also. Then the last stage, which was the full-blown commercialization of the microfinance concept in Nigeria. This we then see development institutions coming in to support, microfinance institution in Nigeria through capital intervention, accompany profit taking. Now, also, you want to also note that the impact of microfinance introduction in Nigeria can really not be overemphasized, because they are the engine room of development in the real sense of it. They are critical tool for, improving the standard of living of the critical mass of the society. And that is what microfinance has done, for us in this country. Looking back, to the last couple of years that the microfinance has been introduced in Nigeria, we have seen the increased impact in terms of lifting the critical mass out of poverty and empowering young entrepreneurs who naturally would not be able to access finance from the mainstream banking. So that's the journey of microfinance.
Mr. Adetunji, talking about the impact of microfinance to the system, particularly to small businesses. We have a recent report by MBS which says microfinance banks in Nigeria recorded an 82% boost in lending, rising from 300.2 billion naira in 2019 to 5+ billion in 2020. Are these lendings to businesses, to the beneficiaries, or is something that went for consumption?
Oh, Thank you, Abby. I would say that that figure is an indication that the microfinance subsector is the fastest growing subsector in the financial segment, right? Because within this same period that you've quoted, the merchant bank and the mainstream commercial bank contributed 12.4 and 35%, to the GDP at that time. But we see microfinance doing much more than that. This was, made possible as a result of loans that are advanced to businesses. In fact, majority of these advances, according to the report that is available to us, about 67% of the sectoral allocation in quarter one 2021 goes to just two sectors, agri and trade and commerce. The other 11, about 12 other sectors share, the remaining 33% of sectoral allocation of advances to this sector. That is, in essence, to tell you that the microfinance institutions are driving inclusion, through empowering small and medium enterprises. And of course, the Nigerian Bureau of Statistics, figures shows us that microfinance contributes about 48% to the national GDP. That in itself is to say that microfinance institutions, because they are the closest to the MSME, so they are empowering this MSME to contribute significantly to the gross national development product. And that's what we have seen. So the figure is quite right. And the advances in the sector over the time has been to businesses, small, medium, enterprises.
Okay, talking about financial inclusion, which you mentioned, we also have information that Nigeria's financial inclusion rate kind of improved to 64.1% in 2020 from 63.2%, which was recorded as far back as 2018. How instrumental is microfinance in all of this?
Well, I would say the microfinance subsector is a major pool of that increase. In fact, as of 2021, the figure has increased to 68% now, and we're gradually moving towards, the 2025, target. Now, in a nutshell, we've seen that, the support that the microfinance gives in this regard, because they are rural microfinance bank because of the different categorization of the microfinance institutions we have. We have the tier one microfinance bank, we have the tier two microfinance bank, then we have the state licensed microfinance bank. We have some microfinance bank who can operate nationally because of the kind of license they carry. So now, the tier two microfinance bank are the ones that operate within a local government of a particular state. That the tier one operates within, the local government, but they can have about 5 branches within that same, local government. So they are closer to the people. So therefore, people that ordinarily will not have access to the commercial bank, where some of those bank branches cannot reach, microfinance banks are there, either working through their agents, there is a, SANEF agent, either working through the SANEF agent or have their bank branches in some of those rural places. We have seen that microfinance bank has significantly helped, in increasing the, taking that quantum leap for financial inclusion from what it used to be to what it is now. And with the help of the regulator, the central bank, who has, introduced the 3-tier KY requirement for microfinance institution. What does this mean? This means that, ordinarily, individual who does not have, they don't own a car, so they don't have a driver license. They have never traveled outside the country. They don't hold international passport. There should be some form of identification that will allow them, join, the financial inclusion net. So therefore, the 3-tier KY requirement was introduced so that people like that can either get attestation from their head of community or village chief to attest to them that they're a member of this community. Therefore, they can open a bank account with a microfinance bank. That's not applicable in the mainstream banking. So we've seen that microfinance are actually, as they were closer to the people, they also drive financial inclusion within the grassroots.
How have these reforms helped financing for MSMEs, looking at the platform of the microfinance?
This is riding on the back of reform, intervention of government. We have the central bank who supervise, the subsector, and therefore bringing all microfinance institutions under regulation. I mean, there are licensed microfinance banks, apart from, the one that are not under direct regulation of the Central Bank of Nigeria. So the one under regulation are critically examined, right? There's a periodic reporting that must be done, to the Central Bank of Nigeria. And there are other parallel institutions that are strengthening, microfinance practice in Nigeria. On the Nigerian microfinance platform, we have several working groups that ensure that our microfinance institutions are safe and sound. We have the corporate governance working group who ensure that knowledge is not scarce for the sector. So therefore, is all-inclusive, engagement to ensure that the microfinance institutions are safe in terms of practices, where there are bad eggs which we cannot rule out. They come under strict regulation of the Central Bank of Nigeria. The Central Bank takes decisive action. I'm sure you are aware some Wonder Bank were closed 2 years ago. They were liquidated by the NDIC because of sharp practices. So these are the effort the government is putting in place. Then on our part as a platform, one of the stakeholders in the subsector is to continue to advocate for good corporate governance through our workshops, our training. In the last few years, we have, had the cost to engage some of the executives of some of these microfinance banks in international exchange program, where they learn good corporate governance, best practices in running microfinance institutions to be efficiently run and operate as they are supposed to be. So in a nutshell, I could say that even though those hindrances exist, we still have a regulator that are doing what they could do to ensure we have a stable and safe financial system through the microfinance institutions in Nigeria.
There is this emergence of financial technology. How is microfinance taking advantage of this? Are you in it, or is it some sort of threat to the microfinance structure as it is today?
Well, it seems so, but then what we made our operators to understand that this is there should be a marriage of a sort. Rather than competing, it should be to collaborate. Now we've seen what the fintech has done in the last few years of coming in. In fact, jokingly, we're teasing some of our operators and stakeholders to say, your transformational strategy. How do you come about it? Is it COVID induced? Or is it part of the organizational, evolving strategies? A lot of our microfinance banks are just, brick and mortar, as it were. But with the advent of financial technology companies, they began to challenge the narrative. People that can no longer go, people that ideally, because you need to develop your product to service the customer, not again, not much about what I'm able to make at the end of it, but if the customer satisfied, everybody wants convenience. So when fintech came in, they offer that convenience. People will sit at the corners of their home. A businesswoman in her shop doesn't want to lose an hour to go and queue the bank to deposit and save collection for the day. So she need an avenue where she can deposit that money and access credit fast for our business to continue to grow. So we see that fintech company does this a lot. So what we are preaching now is there must be a handshake of a sort between the microfinance institution leveraging on the platform, and the fintech themselves has come to say we are not competing with you, we are open to collaboration. So I see this as more of collaboration, and that's what we are doing at the NMP to create that. In fact, our last symposium was focusing on micro fintech tool. How can you use fintech tool to drive financial inclusion? So we are preaching to our microfinance institution that you need to collaborate with fintech companies to drive financial inclusion by coming on this platform to do your business.
Thank you so very much, Chief Operating Officer, Nigerian Microfinance Platform, Mr. Adetunji Afolabi, for sharing your thoughts with us at this particular point in time. And moving on, the Debt Management Office has offered 3 federal government of Nigeria bonds valued at 225 billion naira for subscription through auction. The DMO in a statement said it offers a 75 billion naira March 2025 FGN bond at 13.53% interest rate per annum. That's a 10-year reopening, and 75 billion naira April 2032 FGN bond at 12.5 interest rate per annum with a 10-year reopening, while the third offer is 75 billion naira January 2042 FGN bond at 23% interest rate per annum with a 20-year reopening. The FG bonds are offered at 1,000 naira per unit, subject to a minimum of 50 million naira and in multiples of 1,000 naira thereafter. The World Bank has said that officially recorded remittance flows to low and middle income countries are expected to increase by 4.2% this year to reach $630 billion. This follows an almost record recovery of 8.2% 0.6% in 2021, according to the World Bank's latest Migration and Development Brief released in Washington. According to the report, remittance inflows to sub-Saharan Africa soared 14.1% to $49 billion in 2021, following an 8.1% decline in the prior year. Growth in remittances was supported by strong economic activity in Europe and the United States. Recorded inflows to Nigeria, the largest recipient country in the region, gained 11.2%, in part due to policies intended to channel inflows through the banking system. Let's see how the Naira is trading against major currencies. Investors are smiling home this week as the NGX All-Share Index advanced at the end of Friday's trading. The market gained 0.34% to close at 53,100.21 basis points. Market capitalization also advanced to 28.3626 billion. Then 303.4 million shares exchanged hands in 7,019 deals, valued at 3.574 billion naira. Transnational Corporation, Zenith Bank, and Lafarge Wapco PLC recorded the highest volume of shares. Let's take a trip to the global markets, and Bosidebo is our guide.
Hello and welcome to the Global Market Review. Now, global stocks have endured a roller coaster week but look set to regain some ground on Friday. US stock futures were higher early Friday as investors geared up for the S&P 500 to potentially slide into official bear market territory. Futures tied to the Dow Jones Industrial Average rose 158 points, S&P 500 1.49%, and Nasdaq Composite also topped 1.41%. European stocks also advanced on Friday as global markets looked to regain some ground after a bruising week, with investors assessing the outlook for inflation and interest rates. DAX was 1.33% high, FTSE 1.50%, and Francis CAC 40 1.37%. Meanwhile, shares in Asia also rose on Friday, with markets seeing a roller coaster week as investors assess the inflation and global economic outlook. The Nikkei 225 in Japan rose 2.64% across 26,427.65. The Shanghai Composite topped 0.96% at 3,084.28, and Hong Kong Hang Seng Index also topped 2.68% across 19,898.77. Africa's stocks also mostly pointed upward, with South Africa's JSE Africa Top 40 and Tunisia's Tunidex posting gains. While Namibia's overall index was negative, other stocks maintained same figures. That's the Global Market Review. I am Boss Sede Abel.
Thank you, Boserida. Venezuelan President Maduro has bestowed OPEC Secretary General Mohamed Sanusi Barkindo with the highest civilian honor in Venezuela, the Order of General Francisco de Miranda, First Class. The award recognized the Secretary General's outstanding stewardship of OPEC for the last 6 years. The Order of Francisco de Miranda is conferred by the Bolivarian Republic of Venezuela in memory of Francisco de Miranda, Venezuela and Latin American independence hero, who is considered one of the most influential Venezuelans in modern history. This national honor recognizes Venezuelan citizens and foreigners who have made an indelible contribution to the progress of the country, exemplifying outstanding merits, and President Maduro praised the Secretary General as an exceptional leader who had been instrumental in navigating the oil industry through two oil price cycles, the 2014 to 2016 downturn caused by the supply outpacing demand, as well as the 2020 contraction of demand due to the COVID-19 pandemic. Well, this is where we end this episode of the program. Remember, we value your feedback, so keep the comments, questions, and suggestions coming. All previous episodes are available on YouTube on the NTA's channel. Do join us again on Monday at 3 p.m. for another package. I am Benny Adams saying, stay safe this weekend.